Okay, good afternoon, good morning. It depends on the time zone, I suppose. My name is Eugene. I'm the CEO of Vanadium Resources, and thanks for this opportunity, Ava, to just tell everyone out there a little bit more about our Steelpoortdrift vanadium project. This presentation is available on our website, so some of the slides I will gloss over quickly, given the time constraints. But anyone's welcome to go take a look on our website and you can find it there. This slide is basically a snapshot of what I'm going to be talking about. Just a couple of things to highlight out here. The company is currently fully funded to final investment decision point. We are in the process of finishing a DFS, definitive feasibility study, but we've funded beyond that up to final investment decision. And it's the mining license and mining right has been granted, a 30-year mining right, with all the environmental permits that is associated with that being in place. Any outstanding environmental permits are the permits that you normally, as we progress with the development, would come into place. Same as what everybody said, the last 2 weeks, we weren't immune to the shocks in the system. So I would suggest maybe do the research on the newest numbers in comparison with share prices. We are ASX listed as well as on the DAX as a secondary listing. We've got a well-skilled, diverse management team with skills from legal through accounting, through technical. Myself, I'm a qualified metallurgical engineer. I've been in the industry for about 30 years now, both constructing, designing, commissioning, operating, processing plants. So I'm bringing the technical side of things, but the rest of the board bring all the additional skills to give us that flexibility. In terms of vanadium itself, if you look at the consumption forecast that the markets are showing, it's showing a massive increase in the vanadium consumption over the next 5 to 10 years. A lot of it is driven by what is called the vanadium redox flow battery market. Vanadium redox flow batteries currently constitutes about 5% of consumption, but it is projected to grow at a compound rate of 30% per year, which means by 2025 to 2030, this would constitute nearly 25% of all vanadium used in the world. Add to that the growth in steel consumption, vanadium and steel production. It is predicted that the requirement for vanadium will grow by as much as 30 to 50,000 metric tons of vanadium itself over the next 5-year period. If you look at the next slide, there's very little production expansion that's in the pipeline to combat that growth in offtake and demand side of things. The major expansion is on expansion of existing operations, with only a few projects that's close to coming into production from a greenfields point of view. Add to that China historically has always been a net exporter of vanadium products, as we've seen from last year, and the trend is trying to show up that China is going to start becoming a net importer in future, which will put even more pressure on the supply side of the metal. The graph on the left-hand side, you will note the blue denotes the increase in vanadium or steel production, vanadium and steel production. The red is the additional vanadium that would be required in steel production, with the gray being then the vanadium redox flow batteries up to 2025. What's important to note here is the major consumer of vanadium has always been and will probably for the foreseeable future still be in steel. It's used to make steel lighter. So the more vanadium you add, the lighter the steel and the less steel you require for your construction or for the vehicles. And that plays an important part for the electrical vehicle side as well. The lighter the vehicle, the less battery you require to get it powered, and the less energy you require. So there's a big shift to increase the vanadium usage in the steel making side of things, and add on top of that the vanadium used in batteries. Our project itself is located in the Bushveld complex. It's one of the world's most famous mineralized deposits. It contains more than 70% of the world's platinum group metals, chrome, and vanadium itself as well. It's been extensively mined for the last 100 years. We are situated on the eastern limb side of the Bushveld complex. And to give you an indication, on the eastern limb, there's more than 30 operating mines, large operating mines. Within a 30-kilometer radius of our operation, there's currently 10 major operations run by companies like Glencore, Anglo American, African Rainbow Minerals, Sibanye-Stillwater. So all the big corporations are operating in the area. And that actually has got a significant impact on our project in the sense that the area is well developed. It's an established mining site. The infrastructure is in place. And then we've also got all the skilled labor right on our doorstep. We don't have to build big construction camps or long railway lines or roads. It's all already there. It's like walking into a shop that's there. Now, if you look at the intrinsic qualities that really sets us apart, we've got a big resource that gives us the flexibility to fit the highest profit project into this deposit. We've got more than 600 million tons, of which about 180 million tons is at a high-grade deposit. The deposit itself is very easy to mine. It's near surface, so from 2 meters below surface, we already strike the fresh ore, and so very little mine development required. And it's also very shallow dipping, so that means we've got a very low strip ratio. And in layman terms, that means we only have to move about 1 ton of waste rock to mine 1 ton of mineralized ore. Most other mines, that ratio is about 3 to 1 or 4 to 1, so you have to move a lot more rock just to get the same amount of ore out. It's a high-grade deposit, so it makes your OPEX much lower. We have to process less to produce the same amount. And anyone that's seen the announcement we brought out yesterday, the metallurgy is actually very, very good. It's very easy to process using standard processing technologies. As I mentioned, we've got in excess of 600 million tons in the resource. We've converted all the material that we'll be processing in the first 25 years into a proven and probable reserve already. So it's all proven there. Compared to a lot of the other operations, the most important thing to note here is that our grade is much higher than our peers, and our concentrate grades, except for Largo in Brazil, which has got a better concentrate grade, we much higher concentrate grade than anybody else, which also further reduces our operating costs. The pre-feasibility study was completed last year, July, and based on that, we've rolled into a definitive feasibility study on exactly these same metrics. It's using a magnetic separation concentrator with a standard salt roast and leach plant. There's about 4 of those plants already operating in South Africa for the last 40 years. The technology is well understood. It's been developed here. It's been exported from here to Brazil and even to Australia. So there's very little technological risk to it. Startup capex is in the region of 200 million with an 18-month build period, which will take us to 12,500 tons per year of pentoxide flake at a purity of 98% and greater. What we've built in, because this deposit is so big, we've already built into our financial modeling and planning an expansion of the project in year 6 that can be fully funded out of cash flow at a cost of 150 million, which will further take us up to about 18,500 tons per year for the balance of the 25-year life of mine. This only constitutes 12% of our resource over this 25 years. The only reason we constrained the volumes is because we don't want to flood the market too early on. And then also, to do a financial evaluation for longer than 25 years is not really worth much. The outcomes of the pre-feasibility study is it showed earnings before tax and depreciation of 5.8 billion US. The net present value post-tax, after tax, at an 8% rate was 1.2 billion. And we generate about $140 million per year free cash flow with a 25-month payback and an IRR or rate of return of 45%. All of this was done at a metal price of $9 per pound. Currently, it's sitting very close to the $10 per pound. So there's definitely upside on this. If we compare it to some of the other projects that's in the pipeline to come on stream within the next 3 or 4 years, potentially, which is Bushveld's Mokopane project, TMT's Cabanita, as well as Australian Vanadium. The most important thing to note here is the operating cost that we've got of just over $3 per pound, compared to much higher operating costs for the other guys. As I said, a lot of that has got to do with the metallurgy and the mineability and the deposit itself. So that in effect reflects a very low, very high rate of return and a very good net present value. In addition, our capex is also a lot lower, as I mentioned, because the infrastructure is in place, and we require a much smaller mining fleet to achieve the same production targets. If we look at our timeline to production, we're currently completing our definitive study, and that is due for completion in September. Everything is still on track, both technically and timing-wise and cost-wise, to have that completed by September. We've already initiated some early discussions around offtake agreements and financing, project financing. Most of that financing discussions one can probably only complete once the DFS is in place. But because the project is so compelling, we're already starting that process and starting to identify financiers and partners that we can bring into this project to get into construction. We're foreseeing a final investment decision by mid next year, depending on how quickly we can settle the financing side, with construction then starting immediately afterwards, which means we can be in production by the latter end of 2024, or if there's any delays in the financing, worst case, early 2025. In terms of the offtake and project financing, as I mentioned, we are busy in the negotiations or early negotiation stages of this, identifying which people to take further once the DFS is completed. Nothing has been finalized or fixed and firm, so the door is still open for anybody that wants to come to the table. Looking at our debt service cover and the project itself, as well as the long tail that it's got on the project, the long life, we're fairly confident that we can get around a 60-40 ratio between debt and equity, possibly higher, but we're confident around that side of things. And we're also we're looking at all the different mixes of our financing that ranges from export credit agencies, standard financial institutions, and from that we will then put together the best mix of financing for this project to take it forward. In terms of ESG initiatives, there's a whole range of ESG initiatives that we've incorporated in our design already. We are dry depositing our tailings. We don't have any slimes dams, so that reduces our water consumption and reduces the risk of tailings dam failure. We included for solar power supply on both our concentrator and salt roast process to reduce our carbon footprint. Then our residue stream is still quite high in titanium and iron as well, about 13% titanium and 55% iron. So a lot of additional studies are on the way to see how we can unlock the value out of those. That value is not yet contained in the financials you've seen here. And whatever we can get out of it, that's going to be the cherry on top. In terms of the community, we've got a very good relationship with the community. I said to somebody this morning that I actually struggle because the community wants me to build the mine sooner than I can actually do. So if it was up to them, we would be busy mining tomorrow because they're very excited for this project to get going. So in a nutshell, the project has got excellent financial metrics, which makes us believe that it is very easily fundable. Nothing we've seen so far in the DFS shows that it's going to be any surprises, and we expect to replicate the PFS results, if not improve on them, hopefully. We're only mining 12% of the resource, so there's a lot of scope to either increase our capacity or extend our life of mine. Based on our calculations, we can probably open pit mine for close to 180 years on this deposit. Very competitive operating and capital cost. Working in mining jurisdiction that's well established, all the majors are working there. Mining has been happening in this country and in that area for the last 60, 70 years. So I've got a great pool of experienced operators right on my doorstep. And we've got an experienced management team that's taken projects like this through to production on many occasions before. Thanks, Ava. I didn't see my time. Hopefully I didn't go over too much.
Yeah, just 2 minutes, so therefore only one last question. What is the importance of vanadium compared to other battery metals?
Well, there's been a lot of focus on battery minerals like lithium, cobalt, and nickel, those type of minerals. Everyone knows you've got lithium batteries in your cell phone or in your laptop. Now, you want to charge your laptop and your phone in the middle of the night. And at the same time, everybody wants renewable energy, but renewable energy only happens during daytime when the sun shines or when the wind blows. So vanadium in the battery space fills that gap between when renewables generate energy and when the consumer wants to pull it off. So vanadium batteries are large-scale batteries, so on the megawatt type of scale. So they service whole neighborhoods or whole industrial parks or even whole cities. They're not necessarily small scale like you'll find in your car or in your phone, but it services a bigger demand side of things. So it fills that gap between the renewable energy generation and the final electrical use at the consumer level.